Welcome! In this video, will the Crow coin rally continue? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
When a level that has acted as a strong resistance zone for a certain period of time is broken, it is always considered an important turning point in technical analysis. This is because resistance levels have repeatedly stopped price movements to the upside in the past and have been areas where sellers were concentrated. But when the price breaks through this point, a significant shift occurs in market psychology. What was once dominated by sellers now often becomes an area supported by buyers, marking the beginning of a process driven strongly upward by momentum. Such breakouts create a key sense of confidence among investors because they demonstrate the strength of the market and increase the likelihood of prices moving to higher levels. Especially when the price continues at full speed after the breakout, it reflects buyers' appetite and belief in a strong upward trend. A breakout resistance is never just a graphical event. Deep psychological processes lie behind it. Since many investors have seen the price stall multiple times at such a level, they are inclined to sell when it reaches that zone. However, when the price decisively breaks through, sellers' power weakens, and as buyers take control, a strong rally begins. One of the most important factors here is stop-loss orders. Investors who had positioned themselves around the resistance level are forced to give up their losses when the price rises, which means selling pressure fades. Instead, new buying emerges, and the market gains much stronger momentum. This chain reaction often accelerates the post-breakout rally and can lead to the start of a long-lasting upward trend. The price continuing to move strongly after a breakout also signals the strength of the trend and the volume behind it. Weak breakouts usually don't last long, with prices quickly falling back below resistance. But in a strong breakout, the price behaves as if it has been unchained, reaching higher levels much faster. This demonstrates not only technical strength, but also the dominance of buyers in terms of market psychology. A rapid surge after a resistance breakout boosts confidence, attracts new investors, and amplifies the upward momentum. Such powerful breakouts often reveal the involvement of big players. Retail investors alone cannot usually generate such strong upward moves. A breakout supported by high volume is a clear sign that large funds, institutional investors, or major buyers are entering the market. This suggests that the move is not just a short-term spike, but potentially the start of a long-term trend reversal. The fact that the price continues at full speed after the breakout reinforces this view. Such sharp rallies are typically seen when large capital is driving the market, and once that capital is committed, the trend can last a long time. A price surge following a breakout is one of the healthiest examples of what technical analysis calls a breakout structure. A true breakout is not just about surpassing resistance, but also about continuing upward with strong momentum afterward. If the price only briefly broke out and then fell back, it would be a false breakout. But in this case, the price has broken through and continued upward strongly, confirming that buyers have genuinely taken control of the market. Understanding investor psychology in such situations is also crucial. When resistance breaks, there are two groups. The first consists of those who previously sold at that level expecting a decline. They now realize they were wrong, and as prices rise, they buy to cover their losses. The second group consists of new buyers who see the breakout as an opportunity and enter the market immediately. The simultaneous buying pressure from these two groups pushes the price upward at full speed. Thus, the surge after the breakout is not just due to new buyers, but also to sellers unwilling to miss out. During this process, the price's momentum creates a domino effect in the market. Each new high boosts investors' confidence, which fuels even more buying. As the price rises, new participants join in, and this cycle continues for some time. A breakout followed by rapid continuation often signals the beginning of a much longer-term trend, making it not only a short-term opportunity, but potentially the start of a long-term investment trend. However, while the price surging after a breakout is a major opportunity, it is also something to be watched carefully. Extremely fast moves can sometimes trigger short-term corrections. The key point here is the overall trend direction. If after small pullbacks the price continues to gain upward momentum, then the trend is healthy. In fact, small corrections after a breakout are normal and even healthy for the sustainability of the move. In conclusion, when a strong resistance is broken and the price continues upward rapidly, it shows that buyers are in control of the market. This is not just a short-term move, but can also mark the beginning of a long-term trend. A breakout signals that sellers have lost their strength, while buyers have stepped in much more aggressively. The fast continuation afterward demonstrates that the market has gained momentum and is pushing towards new highs. Therefore, in such scenarios, investors should pay close attention, follow the trend, and take advantage of the opportunities. But we cannot rely only on resistance to make an analysis. Let's take a look at other metrics as well. Stay tuned.
The breakout of a descending trend structure on the RSI indicator is considered one of the most important situations in technical analysis, producing strong signals regarding the future of the market. This is because the logic of the RSI indicator is to capture reactions in overbought or oversold zones, read the direction of momentum, and try to anticipate possible reversals in price movements. What stands out here in particular is the breakout of a descending trend formed on the RSI itself. Normally, trend breakouts on price charts are examined frequently, but trends on the RSI can be just as powerful in generating strong technical signals. When the RSI moves under a descending trend line for a period of time, it shows that market momentum is being pressured downward and buyers lack the strength to push prices higher. However, once the RSI breaks this descending trend line, it signals an important shift in market psychology. Momentum has now begun to accelerate upward, sellers' pressure has been broken, and buyers have stepped in more forcefully. Such breakouts on the RSI are not only a technical indication within the indicator itself, but also act as a leading signal for price. As the RSI rises, buying pressure in the market increases, which directly reflects on prices. Especially when your RSI moves above the 50 level, it indicates that the market has exited the neutral zone and buyers have taken control. In this case, stronger upward price movements can be expected. This is because the rise in RSI either confirms the current position of prices or moves ahead of them, signaling that the uptrend will continue. When a descending trend on the RSI is broken, the breakout generally points to the beginning of a new upward wave. The reason for this is that long-standing market pressure has ended. This end positively affects investor psychology, creates a sense of confidence, and provides the fuel needed for prices to rise. The rise in RSI does not only signal an immediate increase in price. It also suggests that prices can continue to rise more steadily and more strongly in the future. Because once the RSI breaks, momentum shifts direction, and this shift in momentum affects price movements. Since momentum is thought to drive prices, the probability of a lasting and stable rise in prices increases significantly after an RSI breakout. The correlation between rising RSI and rising prices is frequently observed in technical analysis. One of the most closely watched details by investors on the RSI is the breakout of descending trend lines, because these breakouts signal the opening of a new chapter for prices. Moreover, such a breakout on the RSI can affect not only short-term movements, but also medium and long-term trends.
One of the most exciting and powerful aspects of Elliott wave theory lies in understanding the extraordinary momentum that price movements show, especially in the third wave, and its perfect alignment with Fibonacci ratios. If an analysis indicates that the price is currently within the third wave and has reached the 1.618 level, this is generally considered a very positive and strong signal for investors. This is because the third wave is one of the longest, strongest, and most voluminous moves in Elliott's five-wave structure. It is often the wave during which the majority of the market becomes convinced of the uptrend or downtrend, and therefore the price finds its engine power and continues its momentum throughout this wave. Reaching the 1.618 level in particular demonstrates how healthy and strong this third wave is progressing. While Fibonacci projections show that the third wave often pauses or adjusts its momentum around the 1.618 level, if the price breaks through this point strongly, a new target becomes clearer, the 2.272 level. Reaching this level not only has technical implications, but also boosts psychological confidence in the market. When examining the structure of the third wave in depth, we see that it represents one of the most euphoric periods in the market. The first wave is often a cautious beginning, the second wave is a retracement and a wave of uncertainty. But the third wave is when the price truly explodes in the direction of the trend. Volumes increase, momentum rises, and the majority of the market joins in. For this reason, reaching the 1.618 level alone is already a strong indicator of momentum. However, from a technical analysis standpoint, the more critical aspect is breaking through this level. A break above 1.618 shows that the third wave is not an ordinary one, but is exceeding its usual strength and entering a broader projection area. This is where the 2.272 level comes into play. This level is one of the extended projections offered by Fibonacci ratios and acts almost like a magnet for price progression. Buyers grow stronger, sellers become increasingly weaker, and the price's journey toward this zone becomes inevitable. In technical analysis, Fibonacci levels are not just mathematical calculations, but also areas where market psychology reveals itself in its purest form. Breaking above the 1.618 level represents the market's conviction. Participants become convinced that the price will gain even more momentum in the uptrend. This creates a chain reaction. More investors start buying, accelerating the price increase. The acceleration attracts more participants, triggering new purchases, and this positive feedback loop drives the price powerfully toward the 2.272 level. This is why, for technical analysts, 1.618 is seen as a threshold and 2.272 as a target. The breakout process between these levels signals a time when the market's momentum reaches its peak. Throughout the history of Elliott wave theory, the power of the third wave has been observed many times. Ralph Nelson Elliott, who first developed wave theory, argued that prices move according to the rhythm of nature and the cyclicality of human psychology. In this context, the third wave can be thought of as nature's strongest momentum point. Just like the fastest flowing part of a riverbed, the price accelerates in the third wave. The 1.618 Fibonacci ratio represents nature's golden ratio. Therefore, reaching this level is already a sign of a move in harmony with nature. But if nature does not stop here and continues its momentum, if the price breaks above 1.618, then the natural rhythm takes us to the next stop, 2.272. This reflects the organic growth process of the market. What does the price's progression toward this level tell investors? First of all, it provides a clear idea about the strength of the trend. If the price does not turn back from 1.618 and instead makes strong upward moves after breaking it, this is no longer just a simple correction or a short-term rally, but the manifestation of a strong trend. For investors, this creates an environment where longer-term positions can be carried with greater confidence, because the market is not only convinced technically, but also psychologically in that direction. In this conviction process, buying pressure intensifies, pullbacks remain limited, and the uptrend continues with greater strength. Reaching the 2.272 level, in fact, shows that the market has found a sort of peak point, because this is often where the third waves reveal their highest potential. Additionally, a third wave moving toward 2.272 signals that the market has caught strong wins, not only from a technical analysis perspective, but also from fundamental factors. Such moves are often supported by major news flows, an increase in general market risk appetite, or strengthened investor confidence in a specific asset. The wave structures envisioned by Elliott are reflections of these fundamental dynamics in technical charts. Therefore, the process that begins with a break of 1.618 also implies that the market's fundamental indicators are progressing positively. One of the most important points investors must pay attention to in this long journey of the third wave is avoiding psychological traps. Because after breaking 1.618, the price can accelerate very quickly, and during this time, some investors may sell early thinking it has risen too much. However, the perspective offered by Elliott wave theory shows that such moves are actually a natural part of the third wave. In other words, the price's journey toward 2.272 is not an excess, but a process that is supposed to happen. This understanding gives investors patience and helps them manage their positions more effectively. Moreover, such a move creates great confidence in the market. As investors see technical levels being broken one by one and targets being reached, their belief in the strength of the market increases. This belief creates a ripple effect and makes the price's journey even smoother. Especially on the way to 2.272 during the third wave, markets are often filled with fast, sharp, and powerful candles. Even investors who join the market late contribute to the momentum of the price during this process. In conclusion, the fact that the price has reached the 1.618 level in the third wave already indicates the presence of a healthy Elliott structure. If the price breaks this level strongly, then the journey toward 2.272 becomes almost inevitable. This is not only a technical expectation, but also a result of the psychological nature of the market. The harmony of Fibonacci ratios with the rhythm of nature, the way Elliott waves reflect market cycles, and the alignment of investor psychology with this cycle all combine to turn the price's move toward 2.272 into an extraordinary yet natural process. Therefore, for investors, this breakout should be interpreted as a signal of a major opportunity and the beginning of a strong trend.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.